Okay, this video is designed to help you decide whether to switch out of the save injunction forbearance, or at least to address some of the recommendations I've been seeing out there online, even from student loan experts, giving one size fits all solutions. In other words, if you don't fit under this circumstance, you should definitely switch out of save no matter what. And I always say, if you hear a one size fits all solution, even from me, it's wrong. And for example, when you're watching a webcast that I'm giving or a webinar and people are asking me questions, the answer to you or for your situation may be totally different from what I'm giving to that person. And I'll see that a lot. People will email me afterwards and say, Jan, I thought you said to do this for mine, but then you told that person something else. Of course, because they have a different situation entirely. So there are many reasons to stay and save, and I'm going to give you a couple of them because I find out that more than 50% of the people I talk to, the best thing for them to do is to not switch out of save, especially if they're not early or at the end of the PSLF process. So the first reason, the most common one, is because they've been in forbearance for 5 years, either in the pandemic forbearance or in the save injunction forbearance, they haven't had to recertify for a long time. So if you have married borrowers who've been filing jointly, because why bother filing separately if they haven't had to recertify in 5 years? Well, now that it's time to switch, and switching is actually a reality to a different program. You can actually do it now, and they'll actually process it. So they're thinking, well, do I switch now? Well, how high is your payment going to be if you're filing jointly? And sometimes that's cost prohibitive. It might be huge. They need to file separately. That's not for all cases, because sometimes separate filing can be more expensive with the IRS than it is to pay extra to the U.S. Department of Education for the payment increase that you'll get from filing jointly. So those are decisions, that's math that you have to take. But let's just assume that filing separately is the right thing to do for you to get the best possible payment and to save enough money despite the extra costs with the IRS. If that's the case, then you might want to wait, right? You're in the save injunction. You filed jointly last year for 2024, and you want to know whether you should switch. Well, if you wait until after tax season, you can file separately and then jump into the income-driven plan or income-based payment plan and switch out of save injunction at that time, as long as, of course, the save injunction does last that long. If not, you can use forbearance to bridge the gap, general forbearance if you want to make it to next year. That may make more sense for you. That's an example of a reason that you might want to ride out the save forbearance, right? It's probably the most common one. Another example would be I have borrowers who have in the IBR program, let's say 270 qualified months, leaving 30 left for forgiveness. Well, this is again speculation and something to consider, but right now they're on pace to be forgiven if they were to go back and switch out of save and go into the IBR program, for example. They're on pace to be forgiven before this current administration ends. Well, as you may know, if you get forgiven after January 1st of 2026, after the American Rescue Act is over with, then you're going to be expected to pay taxes on the amount forgiven. Well, that could be pretty hefty. You could end up paying 25 to 35% on the amount of taxes that you owe. Now, there are certain situations where you can mitigate the actual liability of taxes, and you would get your accountant to do that, maybe show insolvency or hide assets in trust, things like that you can do. Obviously, that's something you'll have to work at. But if you want to avoid the tax implications altogether, it's not unrealistic to speculate that the next administration may institute tax laws that are more beneficial for borrowers. So we don't know that for sure. However, we do know for sure that you are going to be taxed after January 1st of 2026 if you get forgiven after that point. So to avoid that, to avoid the tax bomb, you might want to time it so that your forgiveness lands during the next administration, improving the chances that the tax liability might be less. Again, you don't know that for sure, but it's not going to hurt that much. So if you've got 30 months left before you're forgiven, and the next administration is coming in about 40 months from now, stay in the save injunction, ride it out, and then don't start accruing qualified payments until you're far enough along so that your actual $300 payment qualification maturity lands during the next administration, I would time it for January 2030 just to make sure anything new is instated. At least you'll have an idea at that point if a Democrat has won, if they've reformed student loan regulation and the tax treatment of student loan forgiveness. Then you can time it so that it lands after that. You might just have to let it go anyways, even if they haven't fixed it. You may accrue a little bit of interest on the way, which means you might have to pay a little extra taxes on the amount of extra interest that you accrued by pushing it off another year. But that's a risk that you can take. But that's just another reason why you might want to think about staying and save for now. So, and of course, the other obvious reason is you can't afford the payment, right? So right now might not be ready for that big jump that you're going to get based on more recent proof of income. These are just 3 examples of many as to why you might want to stay in the savings junction. It might be the actual practical solution for you. So whenever you hear advice saying that unilaterally, if you don't fit under XYZ, you should get out of save no matter what, I see that as very bad advice. I think you should look at it individually and get an individual assessment on it. If not from me, from somebody who can help you determine what all the pros and cons are for making that decision.